Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. I'm your host, Brian Beatty, and we're going to continue our discussion now with Andrew Muller of Mappus Insurance. We were just talking about a really awesome incentive that will allow for up to $1,000 in reimbursement for flood-related preparations when there's a mandatory evacuation for things like hurricanes. And so what I want to talk about now with you, Andrew, is this, again, kind of this preconceived notion that the lowest premium is the best premium. That's the best way for you to save money as it relates to your insurance. We always are looking at, how much is it going to cost me on a monthly basis to own my home? And people always want to maximize, for whatever reason, their purchasing power by taking things as low as they can go. I don't think they put enough value into insurance. So I really just want to, kind of open it up to you and have you explain how you approach the process of identifying the proper plan and product for a person when they are buying a home. So I'm going to just open it up to you to kind of talk to us about that, because this is one thing that I really appreciate about the way in which you do business. Certainly. So we are not a take it off the shelf and sell it type of agency. If you're looking for that, you can call an 800 number. Our conversations start out with getting to understand a family, getting to understand the individuals, getting to understand their risk appetite. And what I mean by that is, with deductibles, do they want a high deductible to save some money, or do they want to go with a lower deductible and feel a little bit more comfortable? You got to have those conversations. Certainly, we want to get our client the absolute best price that we can. But with that, they have to understand what it is they're buying. So oftentimes people, when buying a house, they call 3 or 4 different agencies, and they'll get quotes, and then they'll call us and ask for a quote. And we're simply just we're not a quoting house. We're just not going to provide a quote. We're going to be very detailed with the client, but we then will tell them you're probably going to get some of the same quotes from other agencies, meaning the same insurance company. And all these quotes are going to be different. And typically when they see that, if they see a quote from company ABC Insurance and they say, oh, this one's $1,000 and this one's $1,500, this one's $1,700, well, they're all the same. I'm going to go with the $1,000 quote. Right. And they're not asking why. Yeah. And they have no idea. And unfortunately, a lot of insurance agencies don't explain why, because they only know how to sell on price. And so they're trying to sell the cheapest one, where we will sit down, we will explain, okay, well, this house that has a $500,000 replacement cost has a 2% wind deductible. And what that means is that 2% equates to $10,000 in a wind deductible. Well, if I have the same option over here in option B, but that deductible is only $2,500, but might cost $200 more a year, that might be advantageous for you to spend $200 more a year to save $7,500 should a wind loss occur to your house. And so we go through those examples and just put real life scenarios in front of them. Would you rather pay $200 more to save $7,500 should you have a loss? Or are you willing to risk it, pay a little bit less, and knowing that you have a higher deductible? So we go through those, and the response that we get almost every time is, wow, like, we have been buying real estate for 30 years and no one has ever explained this to us. Right. And that's just one example. And just, simple math, but if there's a difference between a $2,500 deductible and a $10,000 deductible, that's $7,500. And if it costs $200 more per year, then it's going to take you 38 years to spend that difference. Yeah. Yeah, absolutely. And the way that unfortunately, the way things have been going the last couple of years, there's a high chance you're going to have a wind claim or a possible wind claim due to the activity we've been having with various hurricanes. And that's one example, and people really appreciate that because it takes out insurance being a commodity, and they actually understand what it is they're buying, so then they can make a smart decision based on not just the price, but on the deductibles and maybe
Maybe we included other and various endorsements that I'm not going to get into, but we go into all those in-depth conversations with the client. So again, they can make that smart decision.
Right. And then you look at things like, how does personal property get taken into account? For somebody that might be a high net worth individual that has a lot of very nice things inside their home, if a loss were to occur, are those things covered? Those are conversations again that
absolutely
that I appreciate that you have with your clients. I want to kind of keep on the topic of flood insurance for a minute, and I want to talk about I think the way in which people approach the process of obtaining flood insurance. Tell me a little bit about what you experience in your conversations with people that revolve around flood insurance.
Certainly. So when it comes to flood insurance, that's a real specialty for our agency. It's about 20% of our revenue. So we do a lot of flood insurance, but flood insurance, the way you market flood insurance is slightly different than homeowners insurance, where homeowners insurance, we might go to 4 or 5 different companies and get different quotes back, and they're going to have different premiums associated. If you go to a FEMA flood company or a company that represents FEMA, you can go to 5 different companies and you're going to get back the exact same quote. If it's a FEMA flood policy, the rate is the exact same no matter which company it is with. But there are a lot of nuances that go into underwriting flood insurance. So you have to understand as an agent all these little nuances. Is the house vented properly? Are they regular vents? Are they engineered vents? Is the house elevated with an elevator? Is the elevator shaft vented? Those are very common questions. Is there a finished lower level when that the insured built out after the house got the CO? And these are common things that come up. And a lot of insurance agents, again, they just don't spend the time to go through these conversations with clients. And so it can be a big confusion for the client, and that's when they get frustrated, and that's with insurance in general. But with flood insurance, if it's a FEMA flood policy, the rate's going to be the same.
And you brought up something that we run into a lot. We sell a lot of homes that are elevated, larger homes in quote unquote flood prone areas, right? Wherein the owner, let's say the owner built the home or the previous owner built the home, and then they finished a portion of the garage. They've got a man cave down there. Maybe they've got a gym. Maybe, in some instances, they've finished the majority of the garage and created new square footage. When I walk through those homes, we have to have a very specific conversation about that, because if I'm not seeing venting, if I know that is out of compliance with their flood insurance policy and they don't, then their assumption is the square footage that they have created on that ground floor is as valuable as the rest of the square footage in their house. But when a flood insurance claim happens and that room isn't properly vented, tell me a little bit more about that.
Certainly.
People really need to listen to this. This is really important.
This does happen a lot. So again, you have an elevated home. It was built to compliance at the time. The owner finishes out their lower level. They don't do anything with their flood policy. So their flood policy is rated as if it's an elevated home with no finished enclosure below. So would they go and sell the property? The buyer turns around and says, oh, we're going to assume this flood policy over here.
Which happens, 90% of the time?
Happens a lot. Happens a lot. And there's no conversation that happens, oh, this policy's not rated properly, unless we bring it up, because if they come to us, we're going to bring that conversation up and say, if you assume this policy and keep it as is, and there's a flood, that lower level is not covered. They're only going to cover the framing of it. They're not going to put the finished, completed, room you have down there back how it was prior to a loss. And so you could be out tens of thousands of dollars at that point. So the answer to that, a lot of people freak out and they think that, oh my gosh, well, my flood rate is going to skyrocket and go up a lot. And that's really not the case. I don't want to get into technical here, but they basically just charge you for a finished enclosure below. So as an example, somebody might be spending $500 on a flood policy as an elevated home with no enclosure below. If we then go and re-rate that policy and say, okay, it is an elevated home, but they finished an enclosure below, they might charge you $100, $150 more a year for that enclosure. And then if you rate it like that and there's a flood loss, you do have coverage for that enclosure below. So it's just, first off, it's working with an insurance agent that understands flood insurance, because I don't want to bash agents out there, but a lot they just don't know about it. They just don't know a lot about these rules. And so it's working with an agent that knows it, and don't just assume a policy. Make sure it's correct. And don't just, again, back to the pricing, well, this one's cheaper than that one. Well, why is it cheaper?
Right. And here's just one more point on that. If they did not get a permit for that work and a loss occurs, even though insurance may cover that, if they can't get a permit for it, then correct me if I'm mistaken, but insurance isn't going to pay the owner to put it back so that the owner can do the work themselves, right? They have to obtain that has to be permittable space.
Yeah, so you might find a company that they might pay what's called actual cash value out. So if you replace it, they're not going to pay you the full replacement cost, because you're not going to be able to put that back, because you're not going to get a CO to be able to do it. You're not going to get a permit to do it. But if they're probably going to pay you the actual cash value of the damage, but that could be, again, tens of thousands of dollars off from what it would actually cost to replace that. So you're not going to get what you think you're going to get at the end of the day.
Really, so just in other words, if you're going to enclose some space in your garage, it's at your own risk.
Correct, unless your policy is rated properly.
Right. Good stuff. I want to ask one more question, because every 10 years or so, flood maps are updated, and we're getting ready for that here in the Charleston area. So I wanted to just maybe take the last few minutes here and tell us what we can expect as it relates to the updated flood maps and the changes that are occurring here in the next. When is that happening?
That's a great question. So it's been a delayed tactic, I think, from Congress, but it keeps getting delayed. We're being told mid-2019. So that Savannah, Georgia area just went through some changes with map changes. The Hilton Head area, part of Colleton County, had some map changes done. So they're working their way up the coast. So it's almost here. But in a nutshell, what's going to happen is that there are going to be a lot of smiling faces out there, because the maps that are being redone digitally, and they're going to be a lot more accurate than the current maps. And they're finding that the current maps aren't that accurate. And so you're going to see I think it's roughly, we'll call it 15,000 houses go from an AE flood zone to an X flood zone in Charleston County alone.
Wow.
You're going to see about, I think.
And I know what the impact that is, but for the people that don't really understand, different ratings and flood areas, what does that mean for them?
So what that means is that if you're in an AE flood zone, your lender, if you carry a mortgage or a line of credit, they will require you to carry flood insurance. If you're in an X flood zone, you're not required to carry flood insurance. So it's at that point, it's an option. Now, we strongly recommend it no matter where you are in the low country, just because we're in the low country. And even X flood zones are very close to the water. I mean, they truly are. But I mean, that can be the difference in some older homes. People paying $2,000, $3,000, $4,000 in flood premiums a year, taking it all the way down to $500 to $600 a year. I mean, we're talking major differences. And from a real estate perspective, that just made your house a lot more valuable.
Right.
So, but then we are going to see, I think the number's around 2,000 homes go from an X to an AE flood zone. So there will be some people negatively affected, but the far majority of people will be going from an AE to an X, and also VEs down to AEs. There's a lot there too. And a VE, that's the very expensive policy. That's where you're spending $6,000, $7,000, $8,000 in some cases, and they're going to be seeing major reductions. I do want to point out that even if you stay in an AE flood zone, and this is a little technical, but something what's called the base flood elevation, that's the level that you rate your foundation from. A lot of those are going to see positive differences of 2 to 3 feet. So somebody that might have a -1 elevation and is paying $2,000 for flood premium, and they stay in the same flood zone, but it goes from a -1 to a +2, well, your premium just went from $2,000 down to $500, and ballpark range. So that's just a win. There's going to be so much of a win for so many people, but I can't stress enough, if you do get reduced to an X flood zone, do not get rid of your policy. Just because you got reduced down does not mean your risk has changed in any way. You still have a very high chance of flooding to occur.
Right. Andrew, I really appreciate your time as always. If people want to reach out to you, they have insurance-related questions, how do they reach you?
Certainly. The best way is our website, mappusinsurance.com, MAPPUS insurance.com. You can call our office at 763-4200 as well. 843-763-4200. Andrew Muller with Mappus Insurance. Thanks so much, man. Always a pleasure to have you on the program. A lot of really, really valuable information. And again, folks, if you have any questions for Andrew, he's who we refer all of our clients to because he just does a fantastic job. Mappusinsurance.com, MAPPUS insurance.com. Andrew, thanks so much. And thanks for tuning in to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA. When we come back, I'm going to give you an update on what's happening in our local real estate market. So all that and more as the Brian Beatty Real Estate Show continues right here on the Big Talker, 1250 WTMA.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker, 1250 WTMA.